We're also joined by Suyog Kulkarni, who is the research analyst at Reliance Securities, who's with us on the show now. Suyog, we'll get to Wipro in moments from now, but before that, your thoughts on Infosys and how do you think the street is going to react to these numbers, and how does it change the dynamic between TCS as well as Infosys?
Hello. So, Infosys numbers are better than our expectation, both on the revenue front and the margin front. And the guidance that they are giving, which is also updated guidance, is in line with our expectation. So we consider it as a beat. Going on the second question on TCS versus Infosys, Infosys is back currently trading at around a high single-digit discount compared to TCS. But it seems like this year, the revenue growth performance of Infosys will be higher than TCS. So, in our pecking order, also we expect we prefer Infosys over TCS.
The company has held on to its FY22 margin guidance band of 22 to 24%. That is something that the street was anticipating. Omkar, how did Infosys manage to hold on to its, Suyog, how did Infosys manage to hold on to its margins despite absorbing the wage cost? What do you think worked in its favor? And would that give you confidence about the company's margin performance, the ability to manage margins despite the supply side challenges?
What are the reason of this, better than expected margin? It's probably I'll wait for management conference call. But the worries on margin still remains because attrition has gone up to around 20% level on LTM basis, and that's a sharp jump. And we have seen the sustained hiring, both at spatial and lateral level by these companies. So I believe that this attrition and sustained hiring and coming back of SGA cost in upcoming quarters is likely to weigh on the margin, and I will be curious at what level of wage hikes they have given this this quarter for this financial year, and any plan of giving the incremental wage hike to tame the attrition in upcoming quarters. Because Infosys has done that in 2018, FY18-19 also, when attrition has gone up, they have done intervention. So that would the point we are I will be carefully watching.
Okay, that is the Infosys top management, Salil Parekh, the CEO and MD, Praveen Rao, the Chief Operating Officer, and Nilanjan Roy, the Chief Financial Officer, all masked up as they get ready to address the media. But this time around, they're doing a physical conference. For the last 5 quarters at least, the company has been doing virtual, conferences. But this time, they've invited the media to, physically to the campus. But as you can see, everyone is masked up and is trying to stay safe. They will be speaking and addressing all the investor queries in moments from now. We need to slip into a very short break with the news that both Infosys and Wipro have delivered a good set of earnings in the quarter gone by. Get into a break, we'll come back. Growth rate. Suyog Kulkarni, who's the analyst at Reliance Securities, is still with us. Suyog, now I wanted to get your thoughts in on Wipro. A 4.5% organic revenue growth is actually better than what TCS has clocked in. It's slightly lower than, what Infosys performance is, but we know Infosys performance was powered by that one very large Daimler deal. So in that sense, Wipro's growth appears to be, back in the industry growth rates level. This is something that the street was awaiting. What have you made of the numbers, and is there more steam left in the stock?
Thanks again. Wipro's numbers are definitely better than what we were expecting, both in front of revenue and margin. In front of the Q3 outlook also, we're expecting that is around 1.5 to 3%. Still, what they are since 2 to 4% better than what we were expecting. So Wipro has been consistently seen the change in management and research and the restructuring efforts. Wipro has been consistently outperforming our expectation also, and it's growing at the rate of industry. So comparing with other large peers and TCS and Infosys, we see that the valuation discount is narrowing up, and here on we expect limited re-rating potential, and next going ahead, the share performance should, so EPS upgrade should drive the share performance. And like we have seen a good turnaround in Wipro, good deal wins and revenue growth in last few quarters. And I would be looking forward what will be the like deal wins in like Q3 and Q4, and the substantial like outperformance Wipro is doing this financial year, whether that is the company will able to do in next financial year against the peers.
Actually, this would be the fourth consecutive quarter when Wipro's performance has been significantly ahead of street expectations. It's not a modest beat at 8.1% constant currency revenue growth. It's a significant beat compared to expectations. So we'll have to wait, for the street reaction. But the internals, barring the attrition number, actually look fairly healthy for the company. Even their $100 million clients, which is the large client bucket, has gone up from 13 to 15 this quarter, and there has been a sequential improvement in this client mining, as we call it, over the last couple of quarters. The company had done a lot of reorganization. They decided to make certain focus areas, strategic areas. They've been betting on it, and that seems to be working in favor of Wipro. So do you get a sense that the Q3 guidance at 2 to 4% is a bit conservative for the company? The Q3 historically is not the strongest quarter, but 2 to 4% looks a bit conservative, given the momentum.
Yes, but as they are, I think the reason for this is a strong comp in this quarter. But yeah, I feel I would be interested to know the deal numbers in this quarter, and the number of deal wins. That will decide that. But I feel I'm like the numbers are next quarters. I feel it's morely in line what we were expecting.
It is in line with street expectation. I was just wondering if the management is being conservative, because in the last 4 quarters, the company has managed to beat expectations on revenues and pretty much on margins as well. What is your sense? How is Infosys and Wipro being able to maintain their margins?
Going ahead. So last few quarters for continuous tailwind, work from home tailwind, and continuous tailwind for IT names. Going ahead, rising attrition and accelerated hiring, and also return of some of the SGA costs will probably weigh on the margins. And the benefit that we will like to see the tailwinds is operating leverage. That's definitely playing in case of both Infosys and Wipro. And secondly, what will be the some margin benefit the companies will get as the digital portion of business is continuously rising.
Yes, it is. It's now 56% of their overall revenue base. Let's get in a quick comment from Omkar as well. Omkar, thank you very much for joining.